Good morning, everyone. We are kicking off the week with markets reacting to shifting trade dynamics, geopolitical risk, and key upcoming central bank decisions. So let's walk through the latest developments across the dollar, oil, gold, and Aussie dollar. So, starting with the dollar index, the index dropped back below the key 100 level on Monday, wiping out last week's gain. The move came as traders sought clarity on the US China trade relationship. And President Trump repeated on Sunday that China is open to a deal, but details remain vague. While Beijing has indicated it is willing to talk, they have also reiterated that all US tariffs must be lifted first. So attention now turns to the upcoming Fed meeting. While rates are expected to stay unchanged, last week's strong April jobs report has decreased the chances of a near term rate cut. Market pricing now shows only a 37% chance of a rate cut in June, down sharply from 64% a month ago. And from a technical perspective, the DXY is hovering around 99.8. The RSI is just above 40, and MACD is showing a mild bullish divergence, though broader momentum remains weak. Indicators also suggest a neutral bias for now, with support at 99.5 and deeper levels near 99 and 98.9. If the index pushed back above 100 and clears last week's high at 100.33, it could retest 100.7. So moving on to WTI crude oil. The oil started the week on the back foot, falling as much as 5% at the open before recovering slightly. Prices hit a low of 55.14, the weakest since early April, amid renewed fears of oversupply. OPEC announced plans to boost production again, partly as Saudi Arabia pressures members breaching their quotas. Meanwhile, rising exports from Kazakhstan and a potential return of Iranian supply are adding to bearish sentiment, and geopolitical risks remain elevated. Over the weekend, a Houthi missile landed near Israel's main airport, prompting a strong response from Prime Minister Netanyahu. Tensions with Iran are likely to escalate, keeping energy traders on edge. And technically, WTI remains under pressure. The RSI has dipped to 33, near oversold territory, while the MACD continues to widen in bearish divergence. Key support lies at 55 and 54, while resistance is clustered around 57.45 and 58.1. Turning to spot gold, the gold jumped more than 2.8% on Monday, climbing back above 33.30 per ounce. Despite strong US economic data, the drop in the dollar and growing geopolitical uncertainty drove the demand for safe haven assets. Gold spiked after the Houthi attack near Tel Aviv's airport and growing speculation of military retaliation from Israel and possible US involvement. The upcoming Fed meeting and recent rhetoric from President Trump's criticizing Fed Chair Powell are also fueling market uncertainty. Traders are increasingly hedging with gold ahead of the May 7th decision. And on the charts, gold broke above the initial resistance at 33.16.5 with further upside targets near 33.53. Support levels include 33.16.5 and 32.90 and deeper into 32.38, the weekly early low. And overall, momentum is turning bullish in the short term. So finally, Australian dollar. The Aussie dollar surged to a 5-month high, breaking above 0.643 on Monday after Prime Minister Anthony Albanese secured a second term in Australia's federal election. The strong victory implies policy continuity and a stable political environment, which provided a boost to investor confidence. And technically, Aussie dollar remains bullish. The RSI is steady around 61, while MACD confirming upward momentum. All major moving average are aligned in a buy setup, supporting continued strength. And immediate resistance lies at 0.65 and 0.6528, while key support levels include 0.64 and 20-day SMA at around 0.6344. So to wrap up, the dollar is weakening under trade and rate uncertainty. Oil is sliding on oversupply concerns, and gold is rallying on geopolitical tension, and Aussie is buoyant on election clarity. With central bank decisions and US China trade signals in focus, expect heightened volatility throughout the week. And trade wisely, and I will see you in the next update.